All right. Hi, everybody. Welcome to the R.O.Hammer Company's podcast. Today, I have Judd Goodrich from Mainshares. I will let Judd tell you a little bit about Mainshares. But for those of you who have not heard of it, it is a platform that helps would-be business buyers navigate the challenges of buying small businesses. Thanks for joining, Judd. How are you doing today?
Doing great, John. Thanks for having me.
Absolutely. Absolutely. I've been looking forward to this. Can you tell us a little bit about yourself, where you're from, that type of thing?
Yeah, absolutely. I here in Austin today, grew up in Minnesota. Pretty much anything outdoors, I was a big fan of growing up. So snowboarding on the team, played soccer, hiking, biking, rock climbing. The overlap I actually had to like small business and blue collar was I actually worked at like a lot of different small blue collar shops growing up. So did erosion control for a while. I worked at a recycling facility, even a assembly line, and time to time UPS. And then went to school at the University of Minnesota. Yeah, so I had a smorgasbord of jobs. There's honestly more on that list as well. I started working when I was like 13. But then, yeah, went to school, Minnesota in finance, and then started getting more into white collar jobs, Northwestern Mutual, Baker Tilly, did some consulting and working at some startups for, I've been at for an auto injector company. Kind of wrapped out my college years and some of the things I did early on.
Cool. What year how long have you been in Texas?
I've been in Texas for 3 years now. So I packed up the car from Minnesota, drove out to California, was there for 6 years, and then post-COVID needed to move on, landed in Austin, and I've been here since. So it's been great.
Yeah. So in the last 3 years, it's changed quite a bit.
Yeah, I mean, compared to other folks that have been here 10 years, but yeah, I mean,
Yeah.
I would say like
Yeah.
every week, every bi-week, there's a new restaurant, there's a new bar. It's always growing, so it's a very cool spot.
Yeah. I've spent a small amount of time there. It's a great spot. You mentioned some jobs, and I want to talk about Mainshares a lot. Tell us a little bit about your career path, kind of post college. You mentioned a whole bunch of random stuff, but how did you eventually work your way to the role that you're at now?
Yeah, so right after college, I worked for a company called Nutanix. It's a hyper-converged infrastructure company. So like the same technology that's utilized by the public cloud, think AWS, Azure, same technology that's on premise. So like anyone that has seen Silicon Valley, a good comp is the Hooli box, right? So I was
Yeah,
going
it's a
data
great
center.
show.
Yeah, data center to data center, selling to state local education. So being like the local library in Salt Lake City, talking to someone that has been working that data center longer than I've been alive. And that was definitely a pivot decision. I was like, okay, right out of college, it's kind of interesting, but it's very technical. Not something I'm really going to sink my teeth into. And then I moved over to Carta, and I was there for 4 years. And for those that aren't as familiar, Carta manages the equity for probably like 60% of the venture-backed market. So most startups are using it to manage their cap tables, issue their stock options, and then a lot of venture capitalists use it to manage their investments, of course, as well. So I had the privilege of like working on pretty much every new business unit that we launched, right? So we did a lot of cool stuff around like total rewards and like what is individuals getting comp from an equity perspective, a salary perspective across, obviously tens of thousands of companies. I helped launch like their SPV formation and admin team. So working with, emerging managers and individuals that are running deals, how can we provide the infrastructure to actually support those transactions? When I left, I like pulled the report. It was like 1,500 founders during my time there. So met with a lot of, early stage startups, and then that I actually helped transfer over a lot of the infrastructure that we're building here for the SMB space as well. So it's a natural progression, I would say.
Yeah, it sounds like a great experience.
Yeah, definitely
Very,
enjoyed
very
it a
good
lot.
experience.
Really cool people working on incredible projects. So it was cool just to see it from the operators, like the founder's perspective, and then also seeing it on the other side of the table from the venture capitalist side of why they would actually pick each of these companies.
Okay. And then how did you migrate from there to Mainshares?
Yeah, so I took a little bit of time off after maybe like 6 months or so, traveled around, and then I actually met Will the week I got back. So Will was just launching Mainshares. There was no website, a thesis, and some engineers that he slid over from the business brokerage. And we started kind of talking through what this would look like, what they're looking to execute against. I mean, I had like firm believing that ownership is vital, saw that happen with all these startups and, ones that were successful, the few and the brave, really great outcomes. I also heard a lot about search fund investing when I was at Carter because people would come to us and say, hey, can you manage this fund? And then you also start realizing some of like the implications of like bad actor private equity groups when they are buying up so many of these small businesses and masses. I mean, if you look at what happened with single family homes, like there's
Mm.
certain markets like Jacksonville, 23% is owned by institutional capital, right? Like Atlanta's like 19%. And then you realize that from my perspective, I'm like 30 and I've only lived in these markets that have seen massive appreciation from, large players. And it's not unreasonable to think like the same thing plays out across the board with every service provider that you have to interface with. Okay, I need a new HVAC unit, got to go get my car fixed, whatever it might be. So I saw a lot there. And then I realized, well, his thesis on this was like really sound around like one of the biggest competitive advantages these groups have, and private equity specifically, is access to capital. What is also true is business owners a lot of times care about who's taking over this business, right? So if we can put for two groups, both have access to capital, but one of them is going to be able to potentially hold the legacy intact, they pick that person every single time, right? So like realize that, if we're able to solve like the capital restraint, we could probably bring forward better operators that are potentially more deserving and keep some of like the local fabric of, SMBs and, which employs a lot of people intact. So that's the goal. And I was bought into the mission and figuring out how to solve for that because a lot of people have tried and it's definitely a challenge.
Yeah, that's great. You mentioned something just for listeners who aren't familiar. Can you explain what a search fund is?
Yeah. So a search fund is basically an individual is going to go out on a thesis and say, I want to go buy a home services business. And this is like how I'm going to go and execute against it, for example. They would then go to investors and say, hey, here's my plan. And they would raise, call it $1 million or $2 million. Those investors would then provide them a salary because it's going to take them a year to 2 years to find this business. And then they're going to use that capital to actually acquire the business. They're going to start with a small percent of ownership. And if they are successful, they'll get a little bit more over time. So it's a way to get into buying a business that's a little bit de-risked because you've already set aside a lot of the capital up front. The reality is there's only like, call it 150 or so successful search funds that actually execute on a yearly basis. So it's a relatively small percentage of all deals.
Yeah, it's an interesting model. I've heard some debates on this too about the argument, I think, is that going the search fund route, you maybe own less percentage of the business that you're buying, but the fund allows you to buy a bigger business. So it's like, which is greater, 100% of a grape or a bigger chunk of a watermelon or something like
Yeah,
that? Yeah.
potentially true. Also, what people do is they just finance their search themselves. And once they have a deal, and that's where they would come to us and we would help them find the capital, generally at more attractive economics. There's obviously risk that you can't raise the money and then it's all for nothing, but that's
Yeah.
the back and forth there.
Yeah. So maybe that's a good spot to segue. And I have met Will. Shout out to Will, great guy. Can you tell us kind of a little bit about Mainshares for people who don't know, and kind of a little bit about like what the mission statement is?
Yeah. So like the core mission statement is enabling this transfer of wealth, right? People talk about it like the silver tsunami, right? That you have 6, 7 million businesses that are slated to change hands to the next generation over the next, call it 5 to 15 years. Reality is kids don't want the third generation really successful plumbing company anymore. So you have all these new buyers coming in. These are private equity groups. These are corporate transfers. These are existing, we're working with a lot of people that are existing owner operators. Our goal is to enable individuals to take over these businesses. The way that we're actually doing this is a couple fold. One is we're actually helping source the deals and run the transaction process as well. We started as a business brokerage. We have all that skill set and like those systems in place. What I'm usually focused on is how can we help finance a transaction, right? So a lot of times this comes with introducing individual investors to maybe some family offices to actually help capitalize the deal. And then we'll have some really cool support on the post-transaction side as well, which is a little bit newer, but kicking off as well.
Great. Great. You mentioned the silver tsunami. That I think that's another kind of well talked about topic. On a scale or a timeline, where are we in that? They say that, the greatest transfer of wealth in human history. Are we in the middle, the start? What do you think?
It's commonly debated. I've spoken to people that have been in the space for 20 years, and they say that they were told about the silver tsunami before they started, right? So I think that there's a decent amount of my guess is there's a decent amount of pent up supply that will release in call it like a year or a year and a half. I think people are realizing that it is a seller's market because you have so much capital and buyers coming in, right? So the reality is, and we notice this on the brokerage side, is sellers have a fixed price. I want $5 million for my business. If they can't get it, and they're also, they're 60 years old, and they're like, I can, stick around for a couple more years, they'll likely do it. So my guess is people are realizing that they can be a little bit more selective on when they sell and how much they sell for. So I would probably anticipate, and obviously interest rates, and this all has an impact on valuations, will start picking up a little bit more, but still a very healthy supply. Even with all the macro effects that are happening, deals are getting done for sure and picking
Yeah, I was
up
just going to
quarter
ask
over quarter. Yeah.
about the interest rate component. So if it's a seller's market now, when interest rates go down, do you see a larger pool of potential buyers? And we're talking like lower middle market deals. Hesitant to use the word like mom and pop type transactions, but there are people out there who want to buy businesses, and instead of working a 9 to 5 type thing, as the numbers make a little bit more sense as interest rates go down, do you see it becoming even more of a seller's market?
I mean, I think it's a seller's market besides interest rates. It's a result of all the dry powder that's sitting in
Mm.
funds right now. That's the really big. So basically, there's probably 3 years of liquidity that needs to get cleared. So it's about $500 million of mid market and kind of enterprise esque that can move through the market and exit. So there's significantly, it's about 1.5 trillion that's sitting at year 7 of their hold. That will need to
Yeah.
clear, and it'll move everyone up. But the reality is the percentage of people that have not invested nearly enough of the committed capital that they raised for is quite high, which is just causing everyone to go further and further down market. I've noticed that significantly over the last 2 years. Firms that would never look at sub $3 million are bidding at $1 million prices. They also know how the other buyers are using what they're using to finance it. So it's pretty easy calculation to say, if we go at this price, we can beat out effectively everyone. And that's probably going to be the outcome versus interest rates. That's the bigger force, is my opinion.
Yeah. It's I'm obviously active in M&A on a much smaller scale than say a private equity shop, but it does get to the point where if you've built a team who's focused on say integration, change management, that type of thing, start looking at smaller deals to keep people busy and honing the chops, that type of thing. It's interesting.
And I guess from your perspective, John, I'd be curious, where I see people have significantly less pressure on how challenging it is to do a transaction and acquire businesses after they've owned a few, right? Because now all of a sudden, the walls are dropping. You can have an honest conversation with the sellers. Have you noticed that, and even the execution, which is another really big benefit of a private equity group is we do this a lot, right? So if we say we're going to do it, we're going to actually be able to execute against it. Have you noticed that on your
Yeah, a
17th
little bit.
deal?
I think I think a lot of the sellers or would-be sellers that I interact with, whether they are represented by a broker or an attorney, or we've connected some other way, even if they have all the answers or someone's giving them advice, there is a little bit of nerves. And to be able to explain the process through kind of my experience or my lens or whatever definitely is helpful. Being in the majority of the businesses I buy, I've participated in that industry for a long time too. So we relate in that sense, we speak the same language a bit. I think there's a lot of commonality, and I'm sure you would say the same, even though you're probably looking at a wider range of verticals than I am. There's a lot of commonality in seller motivations. Obviously, they want to get paid. It's their retirement in a lot of cases. But I think you mentioned, making sure their staff is taken care of. And there is some family businesses I've bought that it's generation over generation. And to your point or your comments, the third generation wants to do their own thing, but the seller still wants to make sure that the legacy kind of continues or whatever. And I think that separates us a bit from PE because we're kind of in a growth trajectory, and we're always looking for additional people, talent. So, yes, it has been a successful model, but I think the biggest thing is education, and that's kind of where you guys come into a bit. I talked to a lot of sellers who just, they read somewhere that it's a multiple. This multiple is what the business is worth, or they don't understand, how to model for cash flow with including debt service, that type of thing. And I guess to take it a step further, if you don't understand the mechanics of how to look at your business's cash flow, including debt service, you also probably aren't looking at the levers you can pull to make
Yeah,
the EBITDA go up too. Yeah.
which is definitely
Can you
true.
speak to the educational stuff that you guys are doing a bit?
Yeah, I mean, I think I'm interfacing less with sellers, I would say, but definitely been in those conversations. I think it first takes someone that's willing to listen in the first place, right? Like we do have a lot of opportunities to look at, so we can be a little bit more selective. I think inevitably it can be bad counsel, and it doesn't have to necessarily be the seller. You see it a lot of times with attorneys more than
Yeah.
brokers that most people would think. And that's because that's their general counsel, it's their friend that's been doing this for a long time. They're going to protect them in every capacity. So like I think it's like, is there actually a deal to be done? And then you can start having more of a, financial conversation around what this would look like, the different options. I think where people really go why is they will create this structure that makes a lot of sense for me, the buyer, but they won't really have the conversation if that's the outcome that the seller's looking for. Classic example is when 80% of these businesses are the reason they're selling is because they're retiring. So you putting 20% on a full year, 10-year standby note just to make the deal work makes absolutely zero sense to most people. Like, okay, I'm going to be 82 years old. That's how I get like, what are we talking about? And so I think
Yeah.
there's things like that where like there's just misalignment in what outcome do both parties want, and then how can we get there? And I do think that aligning on price is usually where we start. If we can't get anywhere close with some variability to it, then it's probably a no-go. I've never seen a deal go under contract and all of a sudden additional cash flow was found. It's always the opposite direction. If anything, it's going to spread in the wrong direction for the seller.
Yeah, that's funny. Are you able to share numbers? How many deals are you guys doing in a 12-month period?
Yes. I guess it's about on the 12 trailing months, we have completed 17 transactions. So it's about
Congrats. That's great.
yeah, it's about 25 or 30 million dollars of equity that we've been able to pull together for these deals, which is fantastic. A little over $1 million of equity per deal, you know, puts us at close to $200 million of total GMV.
Yeah,
And this is
that's
really,
great.
just started really getting everything in motion the second half of last year, um, and trailing into this year as well. So last quarter we had 9 deals.
Wow, that's
Yeah.
great. That's great. I didn't realize. Okay. I want to ask a little bit about just since you're seeing so many deals and you mentioned kind of trying to do deals where it's, say, somebody who's worked at the business for a longer period of time. They were an employee and the seller's getting ready to retire and they want to buy it, but they might not have the capital. What are like the biggest challenges that those types of buyers, or maybe somebody who's doing a self-funded search, like what are the biggest challenges to finding or to obtaining capital without using a service like yours? Like what are the common issues that you're seeing?
Yeah. I'll start with the employee buyout because it's super interesting. It's like we would love to do more of those. It takes like an education that's even a possibility first though, right? Because the owner knows exactly how much everyone's paid, right? My business is worth $5 million. I know our GM gets paid 150K a year. There's no way that he doesn't know how the financing is going to work, but he knows he doesn't have 5 million, right? So they kind of get
Mhm.
skipped over as an option. So that's like one of the first things. It's also like interesting that you would find someone like a GM working for an absentee owner, effectively running the show, is occasionally very happy with being second in command because they also
Mhm.
realize, hey, if this business doesn't do well, all of these people I work with, their lives, their families, I am responsible for that. And that weight is what a lot of people actually don't really want, and the risk associated with it as well. So it is kind of
That's a great
finding
point.
the balance of like, because we can provide the capital, but if they're not really equipped to like mentally take on the ownership position, it doesn't really work. But
Mhm.
when it does, it's like the coolest aha moment. And there's a few deals we've done that have like completely blown people's like minds that this is even feasible. And that's really cool. Unlike most of the deals we're working on, I think the biggest thing is like when I see someone pull together $1 million or $2 million, they are almost always coming from a very wealthy family, or they're coming from an industry that has access to tremendous capital. Think they were a principal at a family office, a private equity group, an investment bank, and they start tapping people in their ethos that know them and want to participate in what they're doing next, right? They spent 10 years running deals and they're interfacing with all these capital partners. Like the reality is most people don't have access to that. And a lot of the people that we're trying to bring forward as like the next generation of operators definitely do that. Not many people invest into privates in general in the tune of 100K a check. So it's like the access is really hard. Equity is also relatively opaque. It's slow. It's intimidating for a lot of buyers. How does it work compliantly? How do you set it up? How do I even go about reaching out to these people? Right? There's a lot of moving components. The percentage of people that have done any fundraising, especially under their own banner, is like few and far between. So that can be daunting. I think a lot of people make mistakes here and they just assume because they want it and they have a semi-decent deal that it's going to work out. That's not really the case. So those are probably like the two biggest like things that I notice that inhibit people from being able to like pull together equity. The debt is
Yeah.
generally a lot easier, right? It's like if your credit's reasonable, if you have some net worth, right? You're not, and you haven't missed a bunch of car payments, like you'll probably be okay. You actually have a better
Yeah.
position of using the SBA if you're not as wealthy as if you are, because they're obviously going to collateralize more of that.
Yep. Yep. To your point, I like that you mentioned the second in command thing. It is a different skill set too to run a business versus running a business that you own. The risk adds a bit more stress and, the employees underneath you. I also, just based on experience, tend to see with some absentee run businesses where you have kind of second, third in command type people making well above market rates, which it is what it is, I guess.
Yeah.
In some instances, when you run the numbers, once you add in debt, that salary doesn't work anymore and they actually be making less money owning the company. I guess there's some risk too, though, if you have the opportunity to buy it and you decline or you can't come up with the capital and someone else comes in and says, you're getting paid $200,000 for a $70,000 job, you're probably out of a job. But yeah, it's interesting. How many deals do you see that you said you want to do more, but how many are that scenario rather than someone just doing a search?
I would say it's probably 10% that we're like
Okay.
looking at. The time horizon's a lot longer because a lot of times there's a decent amount of like prep work. So we're almost acting as like similar to when we were running a lot through our brokerage. We'd meet an owner and we maybe would like list and work with them on their sale 2 years later. It's a relatively similar flow. So like a lot of those conversations are in flight. They're kind of getting them like up to speed on what they need to know as well. So they're kind of doing that transition work on the forefront. So my guess is like it'll take another year and then we'll see significantly more volume. So it's a lot of more like open intro conversations. They're starting to evaluate it. We're now helping come in as like, and this is a hard thing, is like who you represent. You got to figure out evaluation. We've been testing out different approaches and we bring in a third party valuation shop to keep it a little bit more unbiased, different ways that we make money can incentivize both. So it's a lot of testing and iterating the best process to like facilitate that.
That's great though. So how are you finding these deals? People are coming to you, right? Is it just through educational offerings or how are people making their way to Mainshares from the
Yeah.
buy
So
side?
from the buy side, so I mean, it started a lot of calls that I was having. I think I had like 800 Zoom calls in the first year. Like I would have 60 calls some weeks. Crazy, just like spreading the good word. We've obviously scaled out the team. We have 40 folks that are working across a lot on the go-to-market side. We've launched a operator network where we're at a couple thousand people that are starting to go through some of like the tooling education. We naturally get groups there. We also then partnered with individuals that were involved, stakeholders in these transactions, attorneys, vendors, brokers, right? Anyone that's like around these transactions. And it works really well because we can help ensure that these deals actually get done with someone that's undercapitalized. So they don't want to spend a ton of time on something that's like can't raise the money and it's a very frequent scenario. So that works pretty well, and they'll share deals and operators and buyers to us.
Great. And are 100% of your deals kind of you're helping find kind of the equity gap and then there's primary financing? Is it always SBA, or do you find deals where you have investors financing the whole thing, or?
Yeah, so we do work on deals where we don't help out with equity at all. Some people bring in all their own capital. In
Okay.
those circumstances, we're doing a lot of like the deal sourcing. So we'll
Hmm.
help find the deal, and then we can actually act as like almost like a buy side advisor and run the transaction. So we're going out, getting deals under contract, negotiating price. They come step in, and then we can help coordinate with like different debt providers as well, since we've been working with quite a few. A
That's
lot are
cool.
doing, yeah. So we've been doing a handful of those, and it's a lot of people have been asking for a long time. It's a lot harder, easier said than done. So it's cool to see that's actually in motion.
And is it so if someone has all the capital or equity that they need, you're connecting them with the bank, and then is it kind of almost, I guess, the same as being like a buy side broker? You're just taking a fee for a percentage of the transaction type of deal for doing the search?
I know that it has changed a little bit. I don't know exactly where it landed at. It was a little bit in flight. I think it was, yeah, maybe I won't speak on that right now.
That's
It's
okay.
about to change.
Yeah.
I don't know exactly the fee structure on that. The
I didn't know
first
that you
couple of
guys
deals,
were
yeah.
yeah. I
So
didn't
yeah,
know you were
we've
even operating that as a service. That's great.
yeah, it
That's
makes
cool.
because I think that's like the way that I've always thought about this is like the entire market in this landscape is trying to educate people on the searching process, the buying process. These are like important skills to know. Like, I'm not going to say it's not. Like, if someone doesn't understand a personal guarantee, they don't understand the mechanics of diligence, right? Like, it's not going to work. But at the same time, we can be a lot better at those activities than most individuals can be, especially on like the actual the diligence to the different banks, right? If we are introing all of the stakeholders in these transactions that we know, trust, or been doing reps with, right? Now we don't have a random character into the mix that's going to like make the deal really challenging. Similar on like the equity financing side, and that's what I've been iterating quite a bit on. And we have a handful of different ways and strategies that we can actually help capitalize these deals. But I think the thought is if we can handle this, we can free up more time for folks to really start thinking about in 30 days, you're going to be handed the keys and you're going to be presenting in front of 20 different people of I am the CEO of this company. Let's start thinking about what that is actually going to look like. What's your first 90 days in transition plan and strategy going to look like? Reality is people are so busy with all these other facets that all of a sudden it comes and they're like, oh my goodness, like time to go. Like if we can handle a lot of these like nuances in these transactions, hopefully that frees up time for them to focus on how they're going to be successful operating, which inevitably that's going to be either produce great outcomes or poor outcomes. There's only so much you can diligence. Inevitably something is going to come up. You definitely know this. So it's like, let's see if we can
Yeah.
help from that side of things.
Yeah, no, that I like that too. I mean, I've bought over a dozen businesses, and I can attest, even regardless of the size of the business you're buying, due diligence is a full-time job. If you're dealing with the SBA, even if you're going through a broker who can assist kind of navigating that,
Yeah.
that's a full-time job.
Yeah, it
And then
is,
you start looking at,
especially
like
now.
you said, yeah, planning the integration, change management process. Uh, if you're trying to bring another organization into yours, or if you're just taking over and going to operate an existing business, it's a lot of planning. And, it gets easier with reps, of course, and you learn a little bit, shortcuts and processes and more people get involved. But yeah, that's a valuable service. I do want to learn a little bit more about the investment side of the business, like how you're bringing people together. But before we go there, can you tell us, like, just give us some examples of some of the industries or verticals that the businesses that or the deals you're involved in? Like, what are they?
Yeah. So I would say it's going to be a lot of like SVA overlapped businesses, especially that's how we kind of got started. We're definitely working on, 10, 20, $30 million deals at this point. But where we're seeing the most amount of overlap, and we're probably looking at right now, it's about like 50 deals under contract a month. So quite a bit of volume there. Home services, B2B services, value add distribution, I would say some niche manufacturing, and then recently a decent amount of healthcare and accounting deals. Accounting is definitely something I would say most people are pretty keen on right now, and obviously think that it will be the next HVAC kind of play from a larger strategic buyer perspective. So,
Yeah. We're looking
So,
at that right now too, actually. That is one area where there seems to be a lot of deals becoming available, and it's not a lot to collateralize, of course. So you're talking SBA unless it's a very large shop, and I think that it's not a secret that private equity is pretty active in that space too. So the multiples on larger CPA and advisory firms tend to get a bit out of control.
yeah,
But it's interesting. It's a trend
it's
for sure.
the talent market, I think, is challenging. I think that the thesis that a lot of people have is the offshore bookkeeping,
Yep,
right?
that's what I was gonna say.
Yeah, but if you look at the stats across the board on the number of firms that already do that, it's quite high. So I'm curious what the actual margin expansion people will get when it's already like almost like 45% are already using offshore support to do GL entries. So there could be expansion there, but it also could be a little bit more challenging. And then the delivery side is really where you need solid people if you want to retain clients. So definitely
Yeah, it's a
exciting to see how it
relationship
plays out.
based.
Yeah, it is.
Yeah, yep, and that's you see, let's just say for easy math, we've looked at some CPA shops that are doing say 2 million in revenue, and the profit margin is 45% almost, it's like, and they're
Yeah.
only asking 2x. And I guess it depends on the type of business. Like, are they doing business or personal returns? There's a lot of,
Mhm.
they're not all created equal, but it's ripe for roll up, I guess, if you have the technology and the resources and probably have the experience too to do it, and the team.
Yeah, there'll be some
But
big winners for sure.
you mentioned that kind of as a almost as a cliche, the HVAC play. Is that still pretty active? You seeing a lot of deals in that space?
Yeah, I wouldn't say it's cliche. I think like valuations valuations
Yeah.
have hit owners' heads, right? So
Hmm.
like someone at like a 350K STE is like, I want it 6.5 times, and it's like it's not how
Yeah.
exactly how it's going to work. No, but I think a lot of people are still really interested, especially if it's more maintenance versus like new construction. I think new construction like depends on the market, obviously, but I think they're still very attractive and people are excited about running them. I'd be
Yeah.
curious, like in these markets, like if you, I've looked at some and it's like your competition are very well capitalized hitters. So like, sometimes we've also seen, what is it, like air pros that just went under because they over levered themselves. You probably have some of that as well, but more sophisticated players in the space obviously make it harder to execute.
Yeah. And no disrespect to anyone running an HVAC or buying an HVAC company. It's a great business.
Great
I feel like
business. Yeah.
it's a cyclical thing where you heard about lots of HVAC or kind of that type of businesses being rolled up. Not
Yeah.
uncommon. I
Yeah,
think
I think it still works, right? It's just like, I mean, think about it like
yeah,
car washes. I mean,
car washes is another one.
people are still paying 8 times and like they're returning their capital just a little bit slower.
I met a gentleman once who had in like the late 90s done a bowling alley roll up,
Wow.
which was kind of there's a lot less bowling alleys than there used to be, but apparently very very lucrative. It's like the right place at the right time type of thing. It's not something a little out of the box nowadays maybe, but
Bowling's maybe have a
yeah.
comeback coming up. Who knows?
Yeah,
Well,
I you never know.
I'm going
So
tonight
I've done
for
some
a
due
team
diligence on a
offsite.
couple of other what's that?
I said I'm going for an offsite bowling tonight. So
Yeah, nice. I've done some due diligence on some kind of like out of the box type stuff too, and I've always been really fascinated. I've worked in the like debt collections, account receivable management space, and one of the things that kind of has always attracted me to it is you get to learn about like the insides, like the mechanics of lots of different industries. We have clients in from banking to healthcare to contractors, all different kinds of stuff, real estate. So you learn a little bit about all different kinds of businesses, how their cash flow works, because you see the delinquent receivables and that type of thing. And one of the ones I've looked at that was very interesting was pallet manufacturing.
yeah,
Yes, highly kind of fragmented. I need to think of a better way to say this. The like mom and pop. There are lots of little players still, and the margins are really great. It's like a very solid business. So there's lots of businesses out there when you start kind of getting off the beaten path and looking at like the HVAC one. I guess what I was trying to say, it seems like it's more common that people look at that, but there's a lot. There's a lot out there.
I met a guy in Austin that launched a pallet rental business because the new pallets are so expensive, but you need them for generally a finite amount of time. So he launched in
Yes.
Austin and he's just moving pallets around and it's basically a logistics play. And
Yes,
they were doing
that's
super
what I was gonna
well.
say.
Yeah, it was very interesting. Knew nothing about it and gave me the 101 on
Yeah. Yep, it is. It does get to the point where it's like becomes a trucking company almost. And then I gotta be honest, I did kind of a deep dive. It's been a couple years, but there's a secondary revenue stream that comes off of it where you're taking the damaged pallets and it's
it.
a
Yeah.
second piece of equipment that shreds them and you dye them and turn them into the mulch that you buy, you bag it, sell it to
Yeah.
Home Depot type of thing.
Wow.
For yard mulch, yeah. It's interesting. It's an interesting business. Not something that you would think about. And there's a lot of players still. Pretty neat. We're running kind of close to time. I do want to learn a little bit more because about how you're bringing people together because you're
Yeah.
attracting not just people who want to buy businesses, but also people who want to invest. As
Yeah.
kind of it's a unique class of investment. I guess I'd call it. Can you speak to that side of it a bit?
Yeah. So that's what I've also been, I would say half of my mind is focusing on how do we find capital that would be interested in participating. Obviously, um, we're almost like an evergreen fund. So every $1 million, 2 million, 5 million that's deployed, we need to figure out how to backfill that. Right. So like we do have a lot of repeat investors, but if you think about $1 million capital raise, that is not a family office likely. It's call it 10 to
High net worth.
15 high net worth
Yeah.
individuals. High net worth individuals don't have infinite amount of cash. They can maybe do 1 to 2 deals a year. So you're naturally always bringing in new people. I think there's the way the people kind of personas that we found that are really great to work with are investing professionals. So think family office, private equity, director level to managing partner, not investing out of their fund, but individually investing, right? They
Hmm.
really understand this, what a good deal is, but they've also done, and they played with, LP capital with 30 portfolio companies, what works and what doesn't work, right? So like, how do you execute against this growth strategy, or what are some learnings I've done in the past? So that's actually pretty interesting. And then the other side is like small business owners. That's like, in my opinion, the ultimate unlock, and they can be really cool. Deal flow eventually when they're ready to sell can help them advise, invest, get in the ecosystem. But they're also viewed as a lot of times like strategic capital, right? We've been able to pull in, someone that's been operating at HVAC business for 10 years, right? They're a little bit younger in their career and now they're investing into other home services businesses. They get calls, hey, what do we do in this circumstance? And I have friends that operate some, and they're getting hit with random fines, and they're like, where do I even go? And I'm moved from like I'm going Minnesota to like I'm going interstate, and now like I'm getting these agencies reaching out to me to ask for an audit trail. Like, what do you do? Um,
Yeah.
so like the way that I think about it is like we stack the cap table with people that can actually provide some level of value. And we've seen super interesting things. I think it's attractive from like an investor standpoint because what other asset or what other type of investment can you have any impact on the outcome? Like, I'll wait. It's like you're in real estate, you're not going to go actually build this home, right? Or like find people to like live there. It's not feasible. Versus, we have one investor who's really good on the web development side. Half of these businesses are off HTML5. He just spins them up on brand new website, connects some things on the back end. It takes him a week, and that's what he loves doing. And he's like really good at it. And he can connect some like accounts payables, receivables, and things like that, and create some invoicing systems. So like really cool things, and that's where I'm focused versus like most people would think like crowdfunding, get large checks that are actually um, helping impact the outcome.
Yeah, that is really unique. I don't think there are many platforms, I guess you'd call it, or organizations like yours where you have the ability to invest, but also kind of be somewhat active in the investment, if that makes sense. Yeah. Do you have guidelines, or is it kind of deal by deal, like, hey, you can invest, but you can't be showing up at the shop type of thing? Is not an issue. The people investing are a bit more sophisticated than that.
I mean, I don't foresee that happening. And obviously, like, who knows this world we're living in. I'd say most people they're having a conversation, right? So we're letting like the two parties decide, hey, I want a board seat. Other counterparties, like, you're not getting a board seat, right? Decision's kind of made. Or usually how it plays out is like investors are, there's a lot of competition to get allocation of these deals, right? That's been
Hmm.
really common with like high quality deals. So they're kind of pitching themselves as well. Like, here's what I can bring to the table. I got some relationships on the supplier side. Here's how I can help you. This is why we should work together. So it's more of like a partnership at the end of the day.
Yeah. I didn't realize that the buyers were actually meeting with the investors and there was some choice. I thought it was
Oh yeah.
you need X amount. Here's what you're giving up. Yeah, that's great.
No, so the buyers are dictating a lot of that, and they're obviously negotiating against, but it's a lot of times the buyers setting what they're giving up, setting the terms, and then you have investors that are saying yes or no and participating. So we don't
That's
decide any
really,
of
really
that.
cool.
But obviously, like if someone's coming with really aggressive terms that are like we know are not favorable, we'll just say no to the deal.
So, do you mind sharing, or do you know how many individual investors or offices are in your pool?
It's over 2,000 now.
Wow, great.
Yeah.
Okay.
So it's
Yeah.
growing steadily.
Yeah. Well, we're running out of time. I appreciate it. We could keep talking for hours, I'm sure. Before we jump off, you want to share anything exciting happening at Mainshares that people should know about? Anything new coming up?
Yeah. So the latest that product and kind of service that we're launching is a syndicate tool. So the idea is there are a lot of individuals that have access to deal flow, and they also have people that want to participate in investing to SMBs. The issue is there's really no infrastructure like tooling to create an SPV, manage that SPV, manage the distributions for this asset class. Everything is, and this is what I spent a lot of time on, built for venture, built for real estate. What it leaves is you having to manage all this. Most people don't want
Mm.
to do fund administration for each of these. So it's a really cool thing to see. And basically what it'll enable us is to, allow our investors to start tapping into these different ecosystems where it would be impossible to find that deal and participate in that deal as well. And then the syndicate leads can obviously monetize their relationships and their knowledge in the landscape. So we launched with 5 syndicate leads, and we'll continue to scale out more and help them find deals, help them find investors, and we'll run the transactions through our rails.
That's really smart.
Yeah.
That's really smart. I like that. Well, thanks again for joining. I learned a lot. We'll have to connect again soon. How do people get in touch with you?
You can message me on LinkedIn. Email is just judd@mainshares.com, and we'd love to connect. So thank you, John. As always, I appreciate having me on. It's a lot of fun. So thank you.
Absolutely. It was a great time. We'll talk soon.
Okay. Cheers.
Bye.